This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So I'm going to give an update on the market. I'm going to go through sentiment. I'm going to go through the overbought, oversold condition. I'm also going to look at volatility. I'm going to go through the trends based on the monthly, the weekly, and the daily. And I'm also going to look at the momentum for all three of those time frames as well. So let's go ahead and get into this. We've got some small changes this week. There was definitely a little bit of deterioration in the daily trend. But let's just go through and start with the sentiment. We'll work our way up here. The sentiment, I use the Investors Intelligence Sentiment Survey. I've been working. In fact, they were clients of mine way back in the 90s, and I've been looking at this indicator since 1990. Right now, there's 11% more bulls than bears. We had a little jump this week, and the number of bulls moved up to 43%. So just so you know, what I do is when the market's moving up, I focus on the bulls, and when the market's moving down, I focus on the bears. If we get an explosion of the bulls, then I'd be look for a reversal to the downside. I actually like to see this get up a little bit higher, up closer to low to mid 50s. On the way down, you know, if we can get a move to the upside, which we did of the bears jumped significantly at these two bottoms, then we look for some kind of a reversal to the upside. It's a contrarian indicator. So right now we're looking for signs that the bulls people are getting a little too excited, and we haven't reached that yet. Although it was a pretty big jump from last week. We went from 38 to 43%. So right now I would consider this neutral, but maybe leaning a little bit closer to the negative side just because of how far the bulls have come. At the low, there were about 25% bulls. So we've worked up a pretty significant number of bulls here recently. Now, the overbought oversold oscillator is around, has dropped down a little bit. It actually was a little higher last week than what I was showing, because I was showing a 14 RSI, not a 5 RSI. I like to use the 5 RSI here because it gives us better short-term signals. So I'm on the lookout now. This is kind of working its way back to neutral. It got very close to hitting the 70% mark here. But you can see the areas where when we get up into this zone or below it, and in this case, we had a really nice divergence. If we get that kind of a pattern to develop, then we should be looking for some kind of a opposite direction move. So what I am always looking for is, are we getting overbought and are we getting too bullish, right? So let's say this were to have worked up just a little bit more and this number got up a little bit higher, then we'd have a short-term sell signal based on these two indicators. So and so you can see that at the low, both of these bottoms, these two indicators gave buy signals, even though the trend was terrible, right? We had a sentiment at negative 19% at both bottoms, and we had oversold condition on both bottoms. So just something we want to keep an eye on. It's not going to be, it doesn't have anything to do with the trend of the momentum. It's totally separate, but it can give us some really good insight as to whether there's risk right now. If we look at the volatility is saying, on a daily chart, we're below the ATR, the average true range for the S&P daily, is declining, meaning the average size of these bars from high to close, including gaps, is dropping. And when that happens, the risk is reduced in that time frame, meaning the odds of a big drop start to really come down, and we should actually think that when the volatility is declining like this, that it's more favorable for the market. The same thing is actually happening on the weekly chart. Now, this 18 MA is just barely declining, but it is declining. So we're below a declining 18 week. And for that reason, both of these are in the positive camp right now. So those are improving conditions. The daily obviously kicked in a little bit earlier. This one on a weekly chart just happened last week, where we started to see some kind of a reversal. So just so you know, it doesn't necessarily mean the market's going to take off here. It just means the odds of us really getting crushed quickly, I think it just doesn't make sense to me at this point for that happening. Let's go ahead and switch over to the trend and the momentum. And let's look at what's really taking place. So the monthly chart has this 18-month line that's rolling over. Okay. And we got down to the 40, tried to break that, and then have been rallying back up. And you see how we're getting closer and closer to the 18-month line? Now, I was actually thinking we could get another move up, and I still think that's well within the realm of possibility here to come up and hit that line and possibly get through it. Don't think that that's impossible here. We don't really have any momentum on the monthly chart right now. There's the green and red. Red is above the green, meaning negative DI. The sellers are a little bit stronger than the buyers here, but they're not strong enough to trend. Okay, so that would lead me to believe that we should consolidate on a bigger picture pattern. I don't expect this to turn and go. And I also am thinking less and less that this is just going to fall apart and get killed right now. Now, if we look at what's going on the weekly and the daily and then the hourly, I think it gets really interesting because everybody in the world is drawing in this trend line. Everybody. I mean, I've been on Twitter recently. I just can't get over how many trend lines are drawn here with the little arrows. And let me just tell you, if it's this easy to pinpoint where the market's going to reverse, then we should just throw all this stuff away because there's just no way it's that simple. Years ago, I met with one of the top technical analysts, a guy I had a significant amount of respect for. And at one point we were talking about the 200-day, and he was saying that, I hope we can do better than just use the 200-day as our buy or sell signal, right? I mean, in other words, if you use something that's that obvious to the entire world, I think it's going to be really hard to be consistent. So I am recognizing that this is here. I actually think that's why we started to see some selling here, but the volume really isn't that heavy. I mean, we dropped from this peak, but look at the daily volume bars. You see, this actually had a really good volume day, and then on the way down, we've had 1, 2, 3, 4 or 5 day pullback. Not one of them on the spider got to a overbought condition. Got to the 50%. The average 50-day average of the volume, not one. Now, I mentioned last week that we were crossing over here. We have started a little mini correction. And it's very possible that we could be setting up a 1, 2, 3 pattern that could be developing. Now, I'm not going to say that that's not impossible. What I'll tell you is that when everyone in the world is looking at one thing, it's very rare that ends up being a good signal. Okay. I've seen this over and over again over the years. So just be really careful. Go ahead and follow the plan. See if a trade develops. If a trade develops and you want to take it, you go ahead. But don't be surprised if it fails, okay? Just because of how this is played out and how, at least based on what I have seen, maybe I'm not seeing everybody, but based on what I've seen, everyone in the world is just assuming that this is going to fail at this trend line. One of the things I'll mention is the fourth time at the same line, a lot of times will fail. Okay, so just be aware of that. Doesn't mean that's got to happen. It doesn't mean that we can't retrace here, re-break the 18-week, come down and test a little better, and then turn back up. I'm just saying the odds of this starting a massive down move right from here, based on what I'm seeing, not only because everyone in the world is seeing this, the other thing that I'm seeing is what's going on in the individual stocks that I go through when I do my reviews. I think there's enough improvement in the stocks. A lot of the stocks that I look at have much better momentum. So if you look at this daily momentum on the S&P, ADX couldn't really get above 25. It's a mix in the S&P. I'm not saying if you go into and look at the individual stocks, I'm not saying they all have really strong momentum, but I think by and large, a lot of the best patterns, the stronger patterns are the ADX line is way above the 25 line. They look a lot better to me. So the other thing that you need to keep in mind is that this index and the NASDAQ index is being weighed down by the top components. Okay, the Dow Jones is a little bit different. It's a price-weighted index. It's not like those names are having as big of an impact on the Dow. And if you look at the Dow, it's more diversified. It's a more diversified example of what's going on. So if I look at this and then we just take a quick look at the Dow, look at how much stronger this has been. This has more exposure to financials and industrials, and that's what we're seeing. When I go through my reviews, I'm seeing a lot more strength in the ADX here. So that's how I feel about this. Now, that doesn't mean we can't drop from here, and I want to give you full credit. This could definitely set up as a 1, 2, 3 and decline, and if it does that, I would take it very, very seriously. But one of the things I mentioned that I want to mention here is that I put up the fib grid on the hourly, and I wanted to show that typically for a 2, I like to get this at least up to the 38% retracement for it to qualify as a 2. So we had this little rally here that ended up turning down and then turning back up. I mean, I really want to see the 2. I want to see a 2 develop here. The funny thing is that because of the way this developed, and if you look at this trend line, which is tighter than this trend line, it's not exactly the same trend line, but the 2 is going to be the same. In order to qualify as a 2 on the hourly or the daily, we need to move up towards around 399-ish, something like that. So the way this could play out is, and to be on the lookout for, is maybe a little bit more of a rally form of pinch, while this works its way up here and forms a zero-line reversal, especially if this keeps dropping. So then we'd have a rally up here with the MACDs and this getting low, and especially if this forms like an ABC, you could draw a trend line in, and we'd have a pinch play sell and a zero-line reversal to the downside. So that would be what I'd be on the lookout for to see. If this ends up having a lot of strength and creating a move up through this area and the MACD gets back up above, then we kind of take that off as a potential. It doesn't mean we can't create a 1, 2, 3, but it's going to be a lot sloppier in the way that it develops. The other thing I just want to mention very quickly is that every week we're getting new numbers related to the economy, and the market is jumping around based on that. I mean, this is not an ideal environment for trading. Next week, the Fed comes out and gives what they're going to do with the rates. I mean, you just have to expect a lot of volatility and a lot of misdirection around the Fed. Meaning the Fed, normally you get a lot of volatility and it could go in both directions before it makes a decision on whether it wants to go up or go down. All right, so that's the update for the week. Go ahead and post any questions or comments. Thanks.